Good morning, good evening for people that are in Europe. My name is Romain Danielou. I'm the co-founder of LandQuire. Super happy to be presenting you our portfolio 19. This is the first portfolio of the year that we're going to present to our database of limited partners looking to invest in off-market, underused, undervalued land deals on which we can force their appreciation through our special entitlement process that we've been building over the last 5 years. Today, I'm going to present you a 60-acre parcel that is located in Greenville, Texas, which is 45 minutes east of Dallas. So once you receive the brochure, you will be able to click on the data room directly here and the pro forma. Here, we're talking about a parcel on which we have a pre-conceptual already done on the top left of your screen, where we are able to fit 352 pads. It's a mix of double wide mobile home pads and a side of RVs. So you will see the details a little bit most forward in the presentation. I'm also here with our head of acquisition, Willem van Biezen, that will be showing you his Google Earth analysis on why this parcel is really strategic. Again, we put this property on the contract at $20,000 per acre. So for people that are familiar with the Dallas market, where there is basically over 8 million people already living there, it's a really, really low price per acre. We sent thousands and thousands of offers in that market that resulted in that property that makes the most sense for us. It's flat. The water is in front of the road. We have a 6-inch. We will be doing commercial septics on it. The entitlement process is 1 year, and we will be looking at selling this property fully entitled to a developer. There's already 2 mobile home parks that were built in 2025 and are currently on their way to be stabilized. So we'll go over those different comps to show you how they built it, what's the current absorption rate, what are the rent rolls, and how much these property generate for a potential developer builder that is looking to buy the property from us once we get the full final plat, entitled property, basically, which signals a shovel-ready property ready to build for the developer. So I'll let you guys go over the disclaimer. Obviously, I want to make sure that you can read it, depending whether you're accredited or not. Go over the risk in investing in these kind of properties. We are a private equity land investment platform. So as an investor, you buy shares in the entity that acquires the land, with having LandQuire Management, which is the company, the general partner that take care of the fiduciary duties to get the project forward, acquired and entitled and sold to a developer. Here again, you've got the data room, the pro forma. You can click to have the Google map pin about the property and the initial pre-conceptual plan. I'll go over the market opportunity, the team, the project overview, and the financial overview. And then we'll finish with a Google Earth analysis, a data room review, and we will go over FAQs if you have questions about that specific project. Again, key points here. We have, as you may be aware, in the US, a deficit of 2.3 up to 6.5 million homes that needs to be built. Housing crisis is present, even more in Texas, due to the fact that this is the highest growth demographic state in the US at the moment. Greenville, the population has been growing over the last decade. We are 45 minutes away from Dallas. Dallas metropolitan area is above 8 million people. So for people that are live in Europe, it's pretty much bigger than any city in France, for example, except from Paris. We like LandQuire is really focusing on buying land in those spillover markets where we can still acquire those properties below $30,000 per acre and build affordable housing for people that can't really afford living inside Dallas. You will see some of the articles that we added for you to do your research. And again, do your own research to understand what is the growth of Greenville. You will see that there is over $250 million that is currently being invested toward the infrastructure. So we're talking about water, roads, and obviously the extension of the sewer to support the residential and industrial growth. So same here, you can click here to access the articles and do your research. The reason to invest, here we've got a strategic timing. We have a sustained growth in the North Texas and the housing shortage in the Dallas metropolitan area to create an immediate opportunity for residential development. Here again, as you may be aware, LandQuire focus on residential, and we have 3 different products that we focus on. One is single-family residence, one is mobile home parks, and the last one is obviously RV parks. Here we have a mix of MH and RV for pads that will rent anywhere between $500 to $650 per month, depending if you're on the RV side or the mobile home side. But these are very affordable housing pads for people to put their new manufactured home on top. They sign a 12-month lease, and then they can live there long term. So here, that 60-acre property, we have it under contract for $1.2 million. You will be able to see the purchase agreement directly in the data room. And if you have questions around that specific contract, I'll be happy to answer them. We are able to fit 352 units between MH and RV based on a unincorporated land zoning, which means that we are outside of the city jurisdiction, which really help us to design freely the density that we want to have. We have a pre-conceptual and pre-application meeting scheduled next week with the county. We already have our water research study that is already paid for. We're waiting on the answer. So again, as you may be aware, if you are already a LandQuire investor, we like to present these property, during the due diligence. So we really have time to finish the due diligence based on the contract and raise the capital for you to benefit from the work that we do. LandQuire was created in 2021 with my partner Thibault. We completed over 145 projects so far. This is our 19th portfolio in terms of entitlement. Everything else we were doing before was just a land flipping business. We switched over to a full entitlement business using the open data markets to really focus on quality and not quantity. We raised over short of $40 million on our land portfolios so far. There's a lot of reinvestments that will be made in 2026 due to some properties being sold. So we're hoping to raise $40 million just on the 2026 year to really fasten the growth of LandQuire. We today have over 480 investors. The historical IRR is above 22%. And the average timeline to actually resell a property that we entitled is anywhere between 24 to 36 months as a median timing. Again, a property like this one can be as quick as 1 year to sell after we do the entitlement, and it can be as long as 4 years based on a historical track record. It never took us more than 4 years. If we do not sell the property after 60 months, the GP lose 100% of his promote. In simple terms, it means that as a GP, LandQuire would lose 100% of our margin as a general partner if we do not sell the property within 60 months. And this is contractual between the LPs and the GPs. A little bit about our background. So Thibaut, my partner, is a real estate investor for the last 15 years in the US. He has a great US market knowledge and expertise in a lot of different residential aspects, and has a great knowledge in terms of structuring the investor relation department. My expertise is more focused on my computer science background. I'm a Scrum Master certified, so I focus a lot on processes and project management to make sure that we can put the puzzle across all the different departments. We have a great team that we've been building over the last 5 years. You will be meeting today Willem. If you don't know him, he has been the head of acquisition for the last 5 years now. And is managing the entire data team to make sure we can find those opportunities for you as investors. We obviously have Chris Garcia, that is our head of disposition, and that will be working with the broker to sell the property for the best price possible as soon as we've got the final plat approved and we've got the bids, which are the construction costs, in place to depict that to a regional or national builders that would be interested in building that mobile home park. We also have Edouard, that is our CFO. Paul and Alexandre are working extensively with our investor relation department to make sure that we can increase the amount of partners that can join those land parcels deals. Mohammed is our head of data and IT. And then we've got everyone below here that are your directors of investor relation to make sure all your questions are answered pre-investment, but also during the investment. We send you a report every 3 months to make sure that you know where is the project heading, giving you all the updates on the entitlements and the return of capital based on current market involvements. So again, we've got over 480 investors, $39 million raise. We just wanted to depict you on a yearly basis how much we were able to raise on an equity basis, just so you have an idea of the growth. Last year, as of 2025, we just finished the year at $16 million. We have a goal to double that this year, and we're hoping that you will be part of our growth to become eventually the #1 platform in the US in terms of land investing. Some example of sold PUDs in terms of entitlement. So Yuma was a project where we did an entitlement for a hotel. We sold it over 626 days and generated 57% on the project. We've got Bowie, Texas, where we made 115% for the project total ROI in 913 days. And then we've got Wildmer and Collier. These are two early on land flipping deals that we did. So there's no entitlement that were done in these deals. But again, so we've got obviously those two entitlement deals sold, and we've got two examples of land flipping deals that were made early on. We also have a lot more deals that you can review in the data room. So this is really the corporate data room on which you can get information about the operating agreement, the EIN about the property, our track record, everything that we have currently under management. We have $60 million of land asset under management on which we're looking to sell in 2026 and 2027 for return of capital for our investors. Our current projects in Texas, here we're talking about Dallas, obviously, but we are currently entitling over 3,000 lots in Texas. So feel free to look in the track record and the properties that we have under management. This map is obviously giving you an idea of where we're looking to invest and why. Some projects are in San Antonio. One of them is in Abilene, Texas. One of it is in Brownsville on the border of Mexico, where SpaceX is based. And the latest project, which is Portfolio 19, is in Greenville, Texas, 45 minutes away from Dallas. This is a calendar of ongoing projects. We like to make sure investors can see whether or not we are on time in terms of entitlements and disposition. Obviously, the beauty about land is that not only you can buy it at a discount by applying the open data market and sending as many offers as you want. Currently, we are sending anywhere between 5 to 10,000 offers per month, which help us to acquire at least one deal every 60 days. As of 2025, as of 2026, we are looking to acquire one piece of land like this one I'm showing you today per month. We want to obviously go and buy 12 portfolio this year by making sure we stay on track with all the other portfolios under management. And so far, we are doing extremely well. We have a 100% success rate in Texas in terms of entitlements. Most of them take anywhere between 9 to 12 months to get entitled. The project overview. So today we're talking about a 60-acre parcel in Greenville. We will be taking a minimum investment of $100,000. The horizon to resell the property is 24 to 36 months, depending on the market, interest rate, and the buyer that comes along once we finish the entitlement. The target IRR is 21 to 34%, depending on your ticket size. I will explain a little bit more in details once I show you the financial model. But basically, we do have already a lot of different developments around us, which make it very favorable to go to buyers early on and find an exit for this property. The fact that these parcels are appreciating anywhere between 7 to 8% per year is really helping us in the long term. So we're not playing against ourselves. We don't have any debt on this property. We're buying this property all equity. I don't recommend using debt pre-entitlement. It's really hard to find debt on the pre-entitlement projects. But our platform really focuses on 100% equity, pre-development, pre-entitlement land deals that we can force the appreciation and then sell for a profit 1, 2, 3, 4 years down the road. A little bit more details about the characteristic, about what we want to do on this property. The colorful pads that you're seeing are what's called double wide mobile home pads. Every pad will have 2 parking spaces. On this property, the lowest point of the property will be here on the southwest, and this is where we will be putting the amenities. The amenities will include a clubhouse, some sports courts, including soccer, basketball, and pickleball, and we will have some green space as well as a pool for the homeowners. We are talking about a 6-inch water line coming directly from the road, which is called FM 118. And we will also have 172 RV pads to really have diversity on the absorption once the developer starts opening the park. Here, based on the topography of the parcels, our engineering team are decided to put 4 different detention ponds. We might be able to reduce it depending on how the studies goes over the next 12 months. But at the moment, we want to be conservative by having those 4 detention ponds that still allow us to have 352 total pads. And I will depict to you what's the value of these pads, paper lots, once we entitle it. In terms of sales and comparables, you can see here that we have our parcel, which is the 3710 FM 118 in Greenville, Texas, 60-acre, $1.2 million divided by the 60-acre. You're getting at $20,000 per acre. I can tell you, you're not going to find anything in the market for less than $25,000 per acre. I can guarantee you that. We've looked over and over, and we've done extensive off-market campaigns to find the cheapest price per acre possible, with the characteristics of having a flat topography, water available, and within 8 minutes of downtown. We showed you some comps here that sold for $33,000 per acre, $27,000 per acre, $30,000 per acre. So it's just to give you an idea of what kind of discounts are we getting on the price per acre before we actually start doing the forced appreciation through the entitlements. So really important in real estate. I truly believe that you make your money buying, not selling. If you buy right, you'll be fine. And here, this is, again, great job in terms of our data team and our acquisition team to make sure we can have a discounted price per acre on the acquisition side. In terms of some of the new parks being built in the city of Greenville, what I like to see is new developments and be a fast follower. As soon as we see growth and we see developers investing in a market, especially here where we have 3 brand new mobile home park and RV park already renting the pads, and that's just the pads, for $625 per month. And they are doing anywhere between 10 to 15 homes per month in terms of absorption. By the time we finish our entitlements, the beauty that is that these parks will be done and fully occupied. So we will be the next ones intaking the growth of the city and the new arriving population. So that's a little bit about the market. I will have Willem show you a little bit more of the construction being done in these parks and where they're located, so you have an idea of how we can compare to, for example, Los Caballos. They are 6 minutes away from us, and they have 416 lots. We are 10 minutes away from Pradera Drive, Pradera Estate, and they have 400 lots. Here, obviously, we are at 352. And it's a mix between RV and MH, so you can really focusing on doing marketing on both lines of product. The project timeline, so we're gonna finish most likely the fundraising in February 2026 and acquire the property at the end of February, early March, after we're finished on the due diligence. Obviously, it's going to depend on the pre-application meeting. It's going to depend on the review of the water study, the survey that will be needed to be done, depending on title. But that's really our target closing timeline at the latest in March. The entitlements will take up to 1 year. So we're targeting April 2020. We're targeting February 2027. And then we are looking to resell the property right away at the latest for December 2028. The investment process is very similar on all of our SPV portfolio club deals. You would have with our directors a project selection and investment amount after we do your accreditation, your KYC with our compliance department. Once you choose your project, you can review the contracts and do a free meeting with our CPA to make sure we can agree on your tax situation and making sure it aligns with your goals. Once you sign the contract, you would wire the funds into title or directly into the SPV, and we will let you know once the property is closed. Once the property is closed, you will be receiving the HUD, which is the official document proving the ownership of the property under the SPV, the entity under you bought shares. And then every 3 months, you will receive a report, and that report will give you updates on the entitlement process. We have a weekly call with our land planners, and Willem and his team update our digital Microsoft tools for you to review all the steps that are moving forward in terms of the entitlements. So that's the project monitoring. And then obviously once a year, we will provide to you a K1, and that K1 is useful for you to do your taxes. Okay, with your CPA or your accountant, depending on whether you invest with a US company or outside of the US. Once the project ends, you receive a distribution letter, and that distribution letter basically allow you to put an end and a closing to that investment, and you can decide to either invest in a new project or not. The financial overview. So $100,000 minimum per investor. We offer for that specific acquisition a 10% annual preferred return, and anywhere between 55 to 70% of the project profit going to you as a limited partner investor. The total raise, and that's an equity raise, is $2.45 million. 100% equity, 352 paper lots are obviously planned. There's always some feedback from the county that could tell us, well, we need to be 5% lower or 5% higher, depending on the feedback. But that's obviously the initial preconceptual, and that's great to have that. At least we know we have enough space for the commercial septics and for the roads and the amenities to fit 352 lots. The average value targeted on a paper lot basis for the mobile home would be $15,000 per lot and $10,000 for the RV. The gross resale value targeted is $4.68 million. So that's the $10,000 times the 72 plus the 280 times 15,000 minus obviously the broker, the title company, and the disposition fees. The estimated IRR would be anywhere between 21% to 35%, assuming we resell the property between 24 to 36 months. Here's a little bit more details in terms of the land acquisition cost, the carry cost, the pre-acquisition expenses, and the land planning, which is basically LGA. We work with LGA.com for people that want to go on their website. That's our preferred partner in terms of entitlements on ground. And then we will resell the property with a licensed broker that has expertise into the mobile home and RV space. The total value would be the $4.9 million minus the brokerage disposition. The net revenue would be $4.68 million minus the capital payoff. We're left with $2.2 million of targeted profit, which totals to a 91% ROI on the deal unlevered. Now, how do we split the ROI? How do we split the 91% that we're targeting to make on this deal? Well, we basically get your capital back, the $2.45 million invested. It goes back, the first $2.45 million goes back to LPs. Then we give you your 10% annual preferred return. So if we sell it in 2 years, you get the first 20%. If we sell it in 3 years, you get the first 30%. And after you get your first your preferred return, then there's a profit distribution split. And that profit distribution split is depending on how much you invest. Someone that invests anywhere between $100,000 to $249,000 would be making 55% of the profit. Someone that is between $250,000 and $500,000 would be making 60% of the investor profit above the pref return. Someone that invests between $500,000 and $1 million would be making 65% of the profit. And someone that invests above $1 million would be making 70% of the profit. So based on that, you would see that the ROI goes higher if you invest more. And that really incentivizes our investors to invest more, to go quicker in terms of the acquisition as a general partner. So you can basically compare the ROI and the net IRR on the project based on the timeline that we resell. So for example, someone that invests $500,000 and we sell the property in 2 years would be making 66% ROI, which is a 33% IRR, unlevered, guys, unlevered. I stress that because a lot of you might be multifamily, commercial, ground-up construction investors as LPs or co-GPs, and it's really, really hard in these projects based on the yield on cost to get above 20%. Here, by applying the off-market strategy plus the forced appreciation without leverage, we're able to get on a projected IRR above 30%. And this is really the beauty of it. So that's LandQuire Portfolio 19 in a nutshell. I'm going to let Willem take on the next phase of the conversation to show you a little bit more of his Google analysis for you to understand a little bit more about what's going on in Greenville. And we will take FAQs after that. Thank you.
Let me see. There we go. Thank you, Rama. Good morning, good afternoon, everyone. Thank you for your time today. I would like to share some more information on the research on the data analysis side that we've done prior to putting this property under contract. Showing here is a Google Earth overview of the Greenville market, highlighting the property on the northeast of Greenville is where our 60-acre property is located. On the yellow pins, you'll find current operating parks in the Greenville area, with Los Caballos as one of the newly constructed parks, which is currently filling its park at 10 to 15 on a monthly basis. They have over 400 homes here, and the layout of their plan is very comparable to layout that we have put together on our conceptual plan. They're currently at $625 per month and are almost getting close to a fully occupied park. Then on the south of Greenville, we have another comparable, which is Pradera Estates. They have 425 pads for their mobile home park. As you can see, they also have an amenity package that they're offering, and they're in the same price point at $625 per month as well. On our project, we're targeting a little bit lower when it comes to pricing due to our location of the property, to make sure that we have the ability to fill up a park and get interest from developers on our project once it's fully entitled. In blue and in light blue, you also find some of the existing and newly to be built single family projects that are currently taking place in Greenville. We have companies like LGI Homes, Meritage Homes, and Lennar and DR Horton, as well as Daniel Homes, that are actively growing Greenville's residential potential. Looking at the retail side of the Greenville market, on the southwest side, there's a project called Greenbelt. It's a 325-acre site, which is going to be used for a lot of commercial retail as well as a industrial component that's going to be built within the next 5 to 10 years. So we do expect a tremendous growth on the commercial side of Greenville, and therefore also see a need for new residential projects to be added to the Greenville market. On our end, we're targeting more lower income, affordable housing type of project, with still the space of having double wide pads, as well as offering a wide variety of amenities that will be constructed on the park as well. On top of that, so Greenville has a population currently of 33 to 34,000 people that are living there. Most of them that are currently working either mostly in the southwest part in Dallas area, as well as we're in close proximity to Princeton and McKinney, which are also gradually growing areas. Greenville itself has seen a almost 5% annual increase in population year to year since 2020. And with this project, we do expect that we'll get a lot of interest from developers once it's fully entitled and fully approved, with the close proximity of being only 6-7 minutes out from downtown Greenville. Let me see. Do we want to move on to some questions here, Rama?
can go over the data room for investors to understand what's included in the data room.
Okay, let me see. Okay, so looking at the data room that we have built for full transparency for everyone to have access to see what we're gathering as we're going through the due diligence of the property, as well as post-acquisition while we're going through the entitlement, all the documentation related to that regarding engineering documents, as well as approvals and all the processes we'll go through with the city and county will also be uploaded in here. Looking at this folder, we've put together a pre-analysis on the Greenville market when it comes to the existing parks. Yeah,
We can't see the data room. Share again.
okay, let me see if... Is it working now?
Yeah.
Okay, great. My apologies. So as I was saying, we have a data room that we've put together for the due diligence as well as for the post-acquisition. We have a folder that we created for comparables to show how current parks are performing within the Greenville market from already existing parks, as well as for parks that are currently being filled when it comes to the occupancy. On top of that, we have the contracts for full transparency with the contract price and the terms that we have with the property owner, as well as an overview on the maps on Land ID of the surrounding areas. The plans can be found here with our latest conceptual plan, and as this is being finalized and also post a meeting held with the county, we are will be updating this conceptual plan, which will also be shared into the folder. On top of that, we have surveys that are being worked on. We have a tax history to confirm that there's no unpaid taxes on the property, and so no delinquencies that we will be facing once we get to the closing table, as well as more information on the property zoning, and we'll be uploading more information here as well when it comes to the utility side of the project. On top of that, we also have our pro forma that we've put together on the acquisition side, displaying all the information from an acquisition price per acre, what we are currently under contract for, as well as the price per pad divided by the 352 pads that we have in our conceptual plan. We have our costs associated on the acquisition site, the fees related to the project, as well as all the land planning costs, which brings that total to 2.45 million. And then we also you can find here the valuation on the back end with the double wide mobile home pads being valued at 15,000 per paper lot, and RVs to be valued at 10,000 per paper lot, and all the disposition costs associated with the deal, which result in that 91% ROI on the deal. This is the disposition price per acre once a project is fully entitled, and then also for what the disposition price is on average among the 352 pads. As you can see here, we're creating a very interesting margin by multiplying the value of the property by doing the entitlement by 4.1. And then, as Rama has mentioned on the pro forma here, it's also showing the different ticket sizes of investment and the profit share that comes with the ticket size, as well as all the returns when it comes to the pref, the return on investment, the IRR, depending on the timeline of the exit. So all that information can be shared with interested parties, and as we are working our way through analyzing this project, we'll be filling up all these folders and adding new folders to make sure that we've gathered all the data needed on this project.
Perfect, Will. So thank you for that. We're going to take on questions from everyone in order. So let me go here. What's the first question? Oh, so Henry, just Henry asked questions so far. So who is the end buyer at exit? Builders, operators, or institutional investors? You want to answer that, Will?
Sure. The on our end, the goal is here to make sure that this project is fully entitled and has all the approvals and permits in hand. This gives the opportunity for a developer in the mobile home RV space to take on the project, do the full construction, and keep this as a cash flowing asset in their portfolio, as well as potential institutional investors that we know do have an interest in projects of this size.
Yeah. Why did you choose Greenville over other secondary cities in the DFW corridor?
So we've analyzed Greenville due to its, as previously mentioned, the 5% annual growth that we're seeing and the potential future growth with the large over 300-acre commercial retail increase. The close proximity to Dallas still makes Greenville a very interesting area, but also still gives the ability for affordable housing projects to take place. Whereas on the north and more closer northeast side to Dallas, we're seeing expensive prices on the land side, which is going to make it hard and more complex to make the numbers work for any developer in the more affordable market.
Yeah. Good answer, Will. So what happened if the project takes longer than 36 months? I mean, I would say that land is obviously liquid, but by buying land on the path of development, that's your highest chance of getting liquid and find the right buyer. Contractually, if we don't sell in 60 months, we as LandQuire lose our profit basically that we could generate from the project. So we are incentivized contractually to sell it within 60 months. In any investment, especially in real estate, you cannot guarantee the exit. The only thing you can do is put all your analysis and the green lights that we offered in place in order to dispose it as quick as possible. So far, the longest it took was 4 years for us to sell a property, which was in Virginia. I don't think I would go to Virginia again based on what we're finding in Texas right now in terms of liquidity, the amount of buyers, developers that are moving in to benefit from the GDP growth, the infrastructure growth, the demographic growth. A lot of companies are moving in. So we really want to ride the wave in terms of the price per acre that are rapidly going up, and then applying our technology strategies on the open data to source the best piece of land, and as well as using the system that William built in terms of the entitlement to get it done within 12 months. Not every state will let you get it done in 12 months. We've done it in 11 states, and I can tell you that Texas is the fastest in terms of entitlement process. So that's really aligning all the stars in order to get successful at land investing. But nothing happened if we don't sell it after 36 months. We own the land free and clear. No debt is applied to it, not even seller financing. So time is obviously with us, not against us. It's not like buying a car that depreciates over time. Here we're buying what's called, to my opinion, the best store of value. And again, that can be debated based on the current gold price and silver price. But at least you cannot deteriorate land versus you can always lose your gold or your silver, and you don't really know how much there is actually in terms of supply. Whereas land, you can't really create more land, so that's a true store of value in terms of scarcity. And yeah, so that's why obviously we've been working so hard as land investors for the last 5 years to bring those products to the market, especially for investors that are outside of the US, and people that are looking to invest in the US dollar. For people that are outside of the US and with other currencies, you can probably see right now the geopolitical situation that makes the dollar a little bit with a lower value at the moment. I mean, euro dollar is at 119. I don't think we've seen that since the last 10 years. So it's interesting to see that we've got the dollar at a discount now. And by having that dollar at a discount, you can invest it directly into the best market in the US, which is Texas at the moment. And our job is to find those properties for you at a discount that we can force the appreciation, and generate those returns that are obviously above market returns in any shape or form. So that's the 3 questions for Henry. Is there any other questions for people that are on the call? If not, we're happy to jump on private calls to discuss or meet in person, either where you live or on ground directly in Greenville. I'll be happy to be with you or send one of our director, depending on timeline schedules. But really excited about that opportunity. This is the first portfolio of the year. William has been working on it for the last 3 months, and now it's time to bring it to your attention, so you can do your due diligence and see if that makes sense for you as a diversification play. Again, don't put all your eggs in the same basket. You want to diversify in several deals if you can afford to do so. That's really my advice as a friend, and also as a fiduciary. But yeah, any closing statements, Willem, before we wrap this up?
No, I mean, feel free to reach out if there's any further questions or conversations to be held to clarify why we see the potential in this project on the entitlement and development side. We think that Greenville will see a lot of growth within the upcoming few years, and we think that we're in the right location for an affordable housing project. So thanks everyone for your time today.
Thanks, Willem, for helping me here to cover grounds, and we will talk to everyone later. Have a great rest of the week. Great start of the year. Happy New Year for everyone that I did not talk to. And on behalf of LandQuire, thank you for being part of the creation of our story, based on the vision that we have, which is becoming the #1 land investment platform in the US. Thank you, and have a great day. Bye-bye.